Hi everyone, from this video we are going to start the 5th unit of Entrepreneurship Development, Government Policy and Taxation Benefits. In this unit we are going to learn about the various government policies for SSIs, that is small scale industries, and tax incentives and concession to these SSIs, and non-tax concession along with rehabilitation and investment allowances for sick units. Coming to the government policies for SSIs, some of the government policies for development and promotion of small-scale industries of India are Industrial Policy Resolution 1948, Industrial Policy Resolution 1956, Industrial Policy Resolution 1977, Industrial Policy Resolution 1980, and Industrial Policy Resolution 1990. Since independence, India has several industrial policies, so that Lawrence A. Wainwright attempted to say that if India has as much industry as it has industrial policy, it would be a far well-done nation. With this background in view, a review of India's industrial policies for the development and promotion of small-scale enterprises in the country is initiated. And coming to the first industrial policy resolution, that is 1948, the IPR 1948 for the first time accepted the importance of small-scale industries in the overall industrial development of the country. It was well realized that small-scale industries are practically suited for the utilization of local resources and for creation of employment opportunities. However, they have to face acute problems of raw material, capital, skilled labor, marketing, etc. Since for a long period of time, therefore emphasis was laid in the IPR 1948 that these problems of small-scale enterprises should be solved by the central government with the cooperation of the state governments. And coming to the second industrial policy resolution is 1956. The main contribution of the IPR 1948 was that it set in the nature and pattern of industrial development in the country. The post-IPR 1948 period was marked by significant developments taking place in the country. For example, planning has proceeded on an organized manner, and the first 5-year plan, that is 1951 to 56, has been completed. Industries Act 1951 was also introduced to regulate and control industries in the country. The Parliament had also accepted the socialist pattern of society as the basic aim of social and economic policy during this period. It was this background that the declaration of a new industrial policy resolution seemed essential. This came in form of IPR 1956. Then IPR 1956 provided that along with continuing policy support to the small sector, it also aimed at the ensure that decentralized sector acquires sufficient vitality to self-supporting and its development is integrated with that of large-scale industries in the country. To mention, some 128 items were reserved for exclusive production in the small-scale sector. Besides, the Small Scale Industrial Board constituted a working group in 1959 to examine and formulate a development plan for small-scale industries during the third 5-year plan, that is 1961 to 66. In the third 5-year plan, specific developmental projects like rural industries projects and industrial estates projects were started to strengthen the small-scale sector in the country. Thus, to the earlier emphasis of protection was added development. The IPR 1956 for the small-scale industries aimed at protection plus development. And the next industrial policy resolution is in 1977. During the 2 decades after the IPR 1956, the economy witnessed loop-sided industrial development went in favor of only large and medium sector on the other hand, and increasing unemployment on the other. This situation led to renewed emphasis of industrial policy. This gave emergence to IPR 1977. The policy statement categorically mentioned the emphasis on industrial policy so far has been mainly on large industries, neglecting cottage industries completely, regulating small-scale industries to a minor role. The main thrust of the new industrial policy will be on effective promotion of cottage and small-scale industry widely dispersed in the rural and the small towns. It is the policy of the government that whatever can be produced by small and cottage industries must only be produced. The IPA 1977 accordingly classified small sector into three broad categories, that are cottage and household industries which provide self-employment on a large scale, tiny sector incorporating investment in industrial units in plant and machinery up to 1 lakh and situated in towns with a population less than 50,000 according to the 1971 census. And the third broad category is small scale industries comprising of industrial units with an investment up to 10 lakhs and in case of ancillary units with an investment up to 15 lakhs. The measures suggested for the promotion of small scale and cottage industries included reservation of 504 items for exclusive production of small scale sector, proposal to set up in each district an agency called District Industry Center to serve a focal point of development for small scale and cottage industries. The scheme of DIC was introduced in May 1978. The main objective of setting up DICs was to promote under a single roof all the services and support required for small and village entrepreneurs. From above is that to the earlier thrust of protection, that is IPR 1948, and development from IPR 1956, and the promotion added in IPR 1977. As per this resolution, the small sector was thus to be protected, developed and promoted. And coming to the next industrial policy resolution of government policies for SSI is Industrial Policy Resolution 1980. The Government of India adopted a new industrial policy resolution on July 23rd of 1980. The main objective of IPR 1980 was defined as facilitating an increase in industrial production through optimum utilization of installed capacity and expansion of industries. As to the small sector, the resolution included increasing investment ceiling from 1 lakh to the 2 lakhs in case of tiny units, from rupees 10 lakhs to 20 lakhs in case of small scale units, and from 15 lakhs to 25 lakhs in case of ancillaries. Introduction of the concept of nucleus plants to replace the earlier scheme of the district industrial center in each industrial background district to promote the maximum small scale industries there, and promotion of village and rural industries to generate economic viability in the villages while compatibility with the environment. Thus, the IPR 1980 re-emphasizes the spirit of the IPR 1956. The small scale industry sector still remained the best sector for generating wage and self-employment based opportunities in the country. And the last government policy for SSIC is Industrial Policy Resolution 1990. The IPR 1990 was announced during June 1990. As to the small scale sector, the resolution continued to give increasing importance to small scale enterprises to serve the objective of employment generation. The important elements included in the resolution to boost the development of small scale sector can be discussed as the investment ceiling in plant and machinery for small scale industry fixed in 1985 was raised from rupees 35 lakhs to 60 lakhs, and correspondingly for ancillary units from 45 lakhs to 75 lakhs. Investment ceiling for tiny units has been increased from 2 lakhs to 5 lakhs provided the units is located in an area having a population of 50,000 as per the 1981 census, and as many as 836 items were reserved for exclusive manufacture in small scale sector. A new scheme of central investment subsidiary exclusively for small scale sector in rural and backward areas capable of generating more employment at lower cost of capital had been mooted and implemented. And in Industrial Policy Resolution 1980, which is due to prove the competitiveness of the products manufactured in small scale sector, programs of technology upgradation will be implemented under the umbrella of an Apex Technology Development Center in Small Scale Industrial Development Organization, that is SIDO, to ensure both adequate and timely flow of credit facilities for small scale industries. A new Apex Bank known as Small Industrial Development Bank of India, that is SIDBI, was established in 1990. Greater emphasis on training of women and youth under Entrepreneurship Development Program, that is EDP, and to establish a special cell in SIDO for this purpose. SIDO refers to the Small Industrial Development Organization. And this IPR 1990 implementation of delicensing of all new units with investment of 25 crore in fixed assets in non-background areas and 75 crores in centrally notified background areas. Similarly, delicensing shall be implemented in case of 100% export-oriented units set up in exports processing zones, that is EPZs, up to an investment ceiling of 75 lakhs. These are the various government policies for SSIs implemented in the India. And the next topic is tax incentives or concessions to the SSIs by the Government of India. And coming to the some of the tax benefits available for small scale industries in India are tax holiday, depreciation, rehabilitation allowance, investment allowance, expenditure on scientific research, amortization of certain preliminary expenses, tax concession to small scale industry in rural areas, tax concession to small scale industries in backward areas, expenditure on acquisition of patents and copyrights, profits of business of publication of books. And coming to the first tax incentive for SSIs is tax holiday. Under section 18J of the Income Tax Act 1961, new industrial undertaking including small scale industries are exempted from the payment of income tax on their profits subject to a maximum of 6% per annum of their capital employed. This exemption in tax is allowed for a period of 5 years from the commencement of production. And the second tax incentives of SSIs is depreciation. Under section 32 of the Income Tax Act 1961, a small scale industry is entitled to a deduction of depreciation account on block of assets at the prescribed rate. Small enterprise is allowed subject to maximum of 20 lakhs deduction for depreciation on plant and machinery on the diminishing balance method. In case of an asset acquired before the accounting period, depreciation is calculated on its return on value for plant and machinery that are used in manufacturing in double or triple shift. An additional allowance called extra shift allowance is also available under the depreciation. And coming to the next tax incentives is rehabilitation allowance. A rehabilitation allowance is granted to small scale industries under section 33B of the Income Tax Act 1961, whose business is discontinued on account of the reasons like flood, tufan, hurricane, cyclone, earthquake or other natural calamities. and also riots or civil disturbances also included under rehabilitation allowance. It also includes of accidental fire and exploration, action by an enemy or action taken by combating an enemy come under the rehabilitation allowances. The rehabilitation allowances should be used for business purposes within the 3 years of the re-establishment and reconstruction. The rehabilitation allowance is allowed to be the unit equivalent of 60% of the amount of the deduction allowance allowable to the unit. And the next tax incentive to SSIs is investment allowance. The investment allowance was introduced back in 1976 to replace the initial depreciation allowance. The investment allowance under Section 31A of Income Tax Act 1961 is allowed at the rate of 25% of the cost of acquisition of new plant or machinery installed. Although the investment allowance has been made available for the articles or things except certain items of lower priority, as per the allowance schedule of Income Tax Act 1961, a special dispensation has been provided for the plant and machinery installed in small-scale industries. In comparison with other industries, small-scale industries are at an advantage in claiming a deduction of investment allowance. A small-scale industry can avail of investment allowance provided it has put to use machinery or plant either in the year of installation or in the immediate following year, failing which the benefit will be forfeited. And next tax incentive is expenditure on scientific research. Under Section 35 of Income Tax Act 1961, the following deduction in respect of expenditure of scientific research was allowed: and revenue expenditure incurred on scientific research related to the business of the assessee in the previous year, and any sum paid to a scientific research association or an university, college, institution, or to a public company which has its object the undertaking of scientific research, and any capital expenditure incurred on scientific research related to the business of the assessee subject to the provisions of Section 35(2) of the Income Tax Act 1961. In case of any unabsorbed capital expenditure incurred on scientific research, the provision of the Income Tax Act allowed to carry it forward for adjustment against the profits earned by the business in the subsequent years for an indefinite time period. And coming to the next tax incentives or concession to the SSIs is amortization of certain preliminary expenses. The Indian companies and resident persons under Section 35D of Income Tax Act 1961 are allowed to write off the preliminary and developmental expenses incurred by them in connection with the setup of new industrial unit or expansion of an existing industrial unit. A small-scale unit established in backward area under Section 80HH is allowed a deduction of 20% of its profits and gains provided the unit satisfies the following conditions, like a unit began its production after 31st December 1970 in any backward area of the country. It also considers a newly established unit in a backward area, and it is neither split nor reconstructed out of a business already in existence in backward area. The amortization of certain preliminary expenses is not been formed by the transfer to a small new business plant or machinery which was previously used for any purpose in any backward area, and it employs 10 or more workers in the manufacturing process with power of 20 or more workers without power. And the next tax incentive is tax concession to small-scale industries in rural areas. The Finance Number 2 Act of 1977 inserted a new section 80HHA in Income Tax Act 1961, the taxpayers under the Section 80HHA are entitled to reduction of 20% of the profits and gains derived by running small-scale industries in rural areas. The deduction is allowed for a period of 10 years from the year of commencement of manufacturing unit after 30th September 1977. For this purpose, the expression rural area means any area as defined under the explanation to section 35C subclass 1 of the Income Tax Act 1961. However, this tax reduction benefit is not allowed to the small scale units engaged in the mining activity. And the next tax incentive or tax concessions to the SSIs is tax concession to small scale industries in backward areas. The Planning Commission of India in 1970 and 71 declared 247 districts out of 435 districts are backward areas with a view to provide them special incentives and concessions to establish industries in those backward areas. The newly established small-scale industries in these areas specified in 8th schedule to the Income Tax Act 1961 are entitled to a deduction of 20% of their profits and gains from their gross total income. This deduction is allowed for a period of 10 years beginning with the year of commencement of manufacturing or production. However, if a small-scale industry has already been established in a non-background area and later shifted to the background area, the unit will be allowed this deduction on the profits earned from the undertaking after shifting in backward area for a period of 10 years. A small-scale industry established in backward area but engaged in mining activity is not entitled to such deduction benefit. And the next tax incentives to SSIs is expenditure on acquisition of patents and copyrights. Under Section 35A of Income Tax Act 1961, any expenditure of a capital nature incurred in acquiring a patent or copyright by a small-scale industry is deductible from its income, but the expenditure should be incurred after 20th February of 1966. The expenditure can be deducted in 14 equal installments beginning with the previous year in which the expenditure was incurred in acquiring patents and copyrights for the unit. And the last tax incentive or concession to the SSI is profits from business of publication of books. Under Section 81A of Income Tax Act 1961, which has replaced Section 81. With reference to the assessment year 1991 and 92, 20% of the profits earned by a small-scale industry from the business of publication of books is deductible from its gross total income. The deduction benefit is available for total period of 5 years, beginning with the assessment year 1992 and 93. In addition, deductions are also available in respect of royalties from any company in India under Section 80M and royalties from any certain foreign companies under Section 800 and intercooperative dividends under Section 80M. It also has the deduction under income of cooperative societies under Section SOP. And the last deduction, in addition to the profits from business of publication of books, carry forward and set off business losses under Section 72. These are the various tax incentives or concessions to the SSIs provided by the Government of India under the Income Tax Act 1961. Thank you.